I went to school just to please my dad, developed some anger as aftermath. I fell off the course while you wait for a Porsche. I'm coming in late off a helipad. I ain't got that money, my nose always run.
What's going on, guys? I know that war is definitely not the most exciting topic in the world, and I kind of wish I could just ignore it as well, but it does affect our everyday life, and this video is going to be looking at every single war that we have had in the past 20 to 30 years, and seeing exactly how it's affected our economy and what we can expect it to do to our economy now. So over on this tradingview.com S&P 500 chart, I have looked on a Wikipedia page and I have written down every single war that we have had starting in 2001, and I have marked it exactly where it is on the chart so we can see exactly how it's affected it. So we have this ongoing war in Afghanistan that started in 2001. This started with the World Trade Center being kamikazed into with that plane. And you can see right after that, we went on a bear market, very strong for about 2 years. And this war is still ongoing. There's no resolution at the moment. But then we started a war in 2003 in Iraq. And that war seemed to bring us on this trend going up. And that war was also inconclusive rather. So, you know, not really a win or a loss. It was just kind of a draw, I guess a stalemate, if you will. And then we had this 2004 where we intervened in northwest Pakistan, and the U.S. actually won that war. So we continue on this uptrend while we're still in war with Iraq. We're still in war with Afghanistan. We just got through, no, this war we were still ongoing as well because this ended in 2018. And then we intervened in Somali civil war, and that's still ongoing as well. And that started in 2007, and we continued to keep going up. So war didn't affect the stock markets that much as far as this uptrend. You would expect like war, start another war, start another war, start another war. We would just be on this decline all the way down, but that's not what happened. So then this big crash, why did that happen? Well, it didn't happen because of the intervention in Somali. It happened because of the housing market. And the housing market crashed because of the giant bubble that they were in. And I'm not going to go into all of that. You know, there's plenty of movies on that. I'm sure everybody already knows. But basically, the banks were lying and creating fake identities about these houses, and they were giving them ratings that they didn't deserve, and people were getting loans that they didn't deserve, and people couldn't pay them off. And then they raised the rates on those loans, and that's when people really couldn't pay them off. And then we saw this giant crash. Then we started Operation Ocean Shield in 2009, which we did win, and that was when the pirates were all over the oceans. And I don't remember exactly which ocean it was. I'm not gonna lie, I don't remember. But we apparently won that. It took 7 years, and now after that war, the resolution is there's 90% less piracy in those oceans. So that was a good war. I guess if there is a good war, it was a good outcome, not a good war. But yeah, you see this trend to go back up. But I don't know if we can really say that the Operation Ocean Shield is the reason this went back up, because we didn't get a whole lot out of that war. We didn't get treasures or, you know, better oil deals or anything like that. We just stopped pirates. So then you can go over and check out in 2011, we had the international intervention in Libya, and the U.S. also won that. I believe it was only a 1-year war. And during that time, we continued to go up, and then we came back down in 2011. But this, I don't think, had to do with the war either. So then you come over here, and we start the intervention in Iraq. And this is still ongoing as well. Well, actually, we withdrew most of our troops, and this is where Mr. Biden, you can say whatever you want about whatever president. I'm not going to get into which president I believe is better, but he left billions of dollars of military weapons and such behind in this, you know, conclusion. And you know, those weapons went to the opposing team. So, you know, that's definitely not good. You can say whatever you want about the president, but that decision right there was definitely not a good one. Most people would agree on that. But we continued to go up in 2014, even after entering that war. And then we had another intervention in Libya, which ISIS was largely defeated. So that was a success, and that lasted all the way to 2019. And that was just kind of flat, and we continued to go up. So war didn't really stop here. It didn't make us crash there. And then now we're all the way over here. And we could say that the war started probably right here. Let's get a little chart. You know, it probably started like a little bit before this tick down. And you know, we are at these crazy levels of highs. I don't think the stock market's risen this fast in maybe forever. But, you know, because we're so high and because there's so many bearish things, I think we could be on a natural bear cycle anyways, regardless of the war. The war may or may not help certain economic fields. So, you know, the argument is we go into war every time there's about to be a recession. And the war is supposed to help boost us out of it because, you know, people that didn't have jobs can now get jobs, and we're spending money on military and stuff like that. But it also does hurt a lot of things, such as right now, we just decided that we were going to cut off our oil from Russia, or cut off Russia's oil from the US. I don't know exactly how it works, but it's going to make our oil prices go crazy. So oil is going to do well, depending on how you look at it. You know, the price of oil is going to do well. But the price on Americans for that is going to increase inflation even more, and we're not going to be able to afford our oil pretty soon. And this is also going to, I believe, increase our strain on our energy in general, not just oil. So we kind of have to do these things to put some pressure onto Russia, but I don't even know if Russia is going to really feel all this pressure. We had a bunch of companies the other day like Pepsi, Coca-Cola, Starbucks, I believe. Some other companies, maybe like Johnson & Johnson, no, it was General Electric, pull out of Russia and try to hurt them economically. But, you know, I don't think this is going to stop the war. So I don't know what this is really going to do other than hurt those companies a little bit. And then maybe they have to raise those prices. So we're going to see inflation rise even more. And, you know, when I started making this video, when I had the concept in my head, I was actually thinking I was going to show that when we go into war, the economy actually recovers. And what I've actually just seen by making this chart is it doesn't really do anything, is what it looks like. It looks like the economic, you know, ups and downs are kind of going to do their thing regardless of war. We entered war 1, 2, 3, 4 times in a row during this giant uptrend, and we continued. It did not stop us. So this war, though, I think this is potentially maybe a decline of the start of a bear market, where we could see it maybe jump all the way back down to here. I mean, that's crazy, but on a 2-year time frame, we really could be seeing something like that. And now the next question, though, is will that actually do the same to crypto? Because stocks from 480 to let's say 27 is not a 50% reduction like we've seen in cryptos since their all-time highs. So will cryptos really see another, you know, drop down? Because from 480 all the way down to, let's say, 240 would be half. And at that point, I believe cryptos would probably be down even more. So cryptos would be hitting, you know, maybe 80% declines from their all-time highs. And that would be absolutely insane. It would be a horrible thing to see, but also an amazing thing if you have some money on the sidelines. So I don't know if we are going to continue to see that big of a dip. Definitely not immediately, but in the long term, these are resistance levels. And, you know, we saw it hit it, and then it went back up, and we could be seeing a bubble. I don't want to use like keywords and like phrases like that to try to scare people, but we could be in a bubble. We could be in the start of a long-term bear market for 2 to 3 years. Because when you go back to 2001, when we entered in the war of Afghanistan, we entered a 2-year lull, you know, a 2-year bear market. So if we are entering the bear market, then we entered it about here in, you know, right before February, like December-ish, January, and we could have until 2023, like the end of 2023, until we really start to like turn around, which would be about right here. So we have this time frame roughly of potential ups and downs leading all the way to maybe this like 320 area, or maybe we go further and we do see it retrace all the way back to these lows. I'm not sure. This is just to kind of get us thinking about what we could potentially expect. Okay, one thing to note just before we wrap up is that the stock market actually gapped up all the way from 416 to 424, 425-ish in that range, and now it's sitting at 427, up 2.7% on the day. And I do believe this is because Biden announced his executive order on cryptocurrencies just a few hours ago. The key points were consumer and investor protection, financial stability, illicit activity, U.S. competitiveness on a global stage, financial inclusion, and responsible innovation. And if you look over on Cardano, you can see we jumped up. I think we were at 80 cents last night, and now we're at 85. So we're doing pretty well on this trend up a little bit just for the day. But, you know, if we are in a bear market, then good news is just going to be eaten up, just like bad news is eaten up in a bull market. So this could be, you know, you go up and then you go back down. So we could be looking at that, or this could be a really good executive order that starts to show cryptocurrencies back up towards that, you know, not all-time high, but at least maybe we could see Cardano around 150 again. Because like I showed with stocks, they're only down about 5 to 10% from their all-time highs, if that, and cryptocurrencies are down a lot more. So I do think if you're going to be investing, just my personal opinion, not financial advice, I would be buying cryptos because the assets are much more devalued. All right, everybody, so before you head out, I'm over here on my Discord, just shilling it a little bit. And today is our mint day, March 9th, 8 p.m. UTC, 25 ADA, collection of 300 only. They right here, these snipers are the uncommons, the surfboard ones are the commons, and the further one down below, these portrait style or landscape styles, are the mythical. So please do come by. I'm going to be live, you know. Feel free to come by and tell me what's up, what you like about the project, what you think I could add to the project, or just any questions in general. But anyways, guys, until next time. Peace.
I get it like a G, but it never came easy. You got me coughing up a lung, I wish I rap like Wheezy. I keep my pace, so I'm sorry that I'm breezy. Keep my sneaks laced, cause I can't afford Yeezys. I don't want the gold, give me BTC. Y'all be acting crazy.